What's up, everybody? Bueller here again, and today I'm going to be covering 3 trades we took today on in the live stream. We stream Monday through Thursday for an hour and a half from 8:30 a.m. Central Standard Time to about 10 a.m. Central Standard Time, and then Fridays we don't stream. But when we do stream for the hour and a half, all we do is we cover plays, we cover reasoning, we cover strategies, and we really just go over a bunch of charts and we have fun together as a little community. But the first thing I wanted to cover today is CVS. So we had CVS on the list today. We also had Netflix and AMD that I'm going to be covering right after this, but I wanted to cover CVS first because this chart will teach you everything you need to know about basic price action structure that we like to cover. So big thing about this chart that I liked is that it followed both of my strategies, both the swing trading strategy and the day trading strategy, the BB system. So my day trading strategy, or swing trading strategy, sorry, is when I get a rising volume close over the 9, whether it's on a trend break or a new high open range breakout, that gives me more confidence. As you can see, we had already broken out a trend right here after this broke rising volume, but we didn't get over the 9. We had a reset candle, not break the new low for the double or triple bottom at this point, after the dividend payout. And then you can see the next day, we end up getting a gap up, which gives me extra confidence because it shows buyers are present. Let me remove these before it gets ugly on the smaller time frame. And then rising volume above the 9 to give me the entry. So no, we did not enter this for a swing trade. This was not on my radar for entry, but it did give me a warm chart to look at for the next day. So how did I know to look for calls over that? So one, it gave me that warm and confident push with that swing entry confirming. So right here, as you can see, the 105.30 was our previous day high. So we ended up starting over that, so they gave me a lot of really good confidence. And then right at open, instead of just entering it open, because I don't like to trade the first 10 minutes. The first 10 minutes is something I definitely like to avoid. First 30 minutes is decent, but first 10 minutes is definitely the window I avoid. But as you can see here, though, since this is the candle of importance, I'm going to be focused on this. So I'm going to, and don't let the Fibonacci confuse you. All I'm doing right now is grabbing halfway of that candle because this candle has importance. So I need to see this candle hold importance over halfway of it. The control point, as we call it in my chat, so 105.50. You can see price held it with lowering volume through the first 10 minutes, and the next candle ended up gapping up a little bit and pushing up with rising volume, giving us our entry. This is giving us confident entry because this is already a good entry candle. It's just very aggressive. I wanted more info to give me a little more confidence so I could at least get into this trade and not think it's going to reverse instantly. Very next candle ends up pushing up all the way up to that next target. We ended up holding it to this candle here to see if we could push through it, and we ended up selling. So not perfectly hitting our target, but you don't want to be anal about that. You don't want to be OCD about that and let the perfect number not get hit and you not sell, because what you're trading is momentum, time decaying assets. That's what options are. Think of it as a burning rope, okay? Because if it's on fire on the bottom and you're climbing up it, and towards the top is your profits, but on the bottom is your theta burning, and you don't get that movement you need in the time you need it, then all of your rope is going to burn before you even get to the top. So you got to climb it as fast as you can. That is the price needing to move as fast as you can. So same weeks would have been pretty decent on this, but a next week contract probably would not have moved as amazing just because it was one quick pop. So same week contract on scalps would have been really good for this. But why I really wanted to cover this one first is because it covers both the swing trading strat and the day trading strat. But let's go on to the next couple ones. So we had Netflix on the list today. As you can see, above pre-market high and previous day highs, we have a push up here, but right at open though, we don't have that. You can see right at pre-market ending, it looked like it was getting really bullish. Then it started to look bearish. What did we hold though with lowering volume? The 9 EMA and an important bigger time frame level, which if you auto zoom back out, I do have set from the previous days, as you can see, but a lot of my levels, and I know my chart is messy, but when you go out to the 5-year daily, I have all of these levels set. 392, 380, 405, 369, and all of them are set from about right here. I have a few more set along the way, but a lot of them are from the far left of my chart where I mark the top of my buyers, basically because I don't have any price action here from the past, bit of price action, so I have to kind of focus on past history or historical price action per se to look for plays. So as you can see, above the previous day high was my target, above 382.25, and thankfully after 15 minutes passing, I don't have to worry about the first 10-minute window. We also get a very indecisive long-legged doji right here, which basically tells me I need to wait for more info. My next piece of info that I get is another rejection, but at least we're holding a support. And then from candle to candle, we get rising volume close over 382.25, a very solid entry point. Holding above the 9, riding the 9, end up taking profits as it hits 389.50. on that next candle pushing. As you can see, it ended up going up to that next level, but we're not going to be greedy if we only have one contract and we're trading same weeks, or we're on a smaller account not needing to go that crazy. And if you're on a smaller account, you don't need to be trading Netflix anyway. But very, very good trade. And if this was my entry, where's my stop loss? Do you know where my stop loss would be? There's a few. Pre-market high is a very tight stop loss. This level that we actually entered on is a good stop loss, and the 9 EMA is a good loose stop loss. So if you're trying to be tight and conservative, you're going to want to stick to this. If you want to stay loose and give yourself some extra room, you're going to want to stick with the 9 EMA. So focus on that. And candle closing. Notice how every exit and entry I've talked about is with candle closing. Now let's go look at AMD. AMD was the last trade we took. We ended up taking it under. Actually, I think Leland went into chat and he mentioned it on trade floor. I don't see what time it was, but it was on the list, and then he went into the trade floor and he said, yo, AMD's cracking below the support. And that's just another fine example of the community displaying teamwork, because everybody in chat really does just want to help everybody out. But the break below on the watch list was below 108 with a stop loss of 108.75. Targets are 106.80, 106, and 104.50. So after it broke below 108s, you can see, or I'm sorry, 108.75, you can see it kind of gave some slowdown, and then it dropped with the 3-bar play. This was our entry point, mainly because we liked it below previous day low, but the watch list level was a little bit more conservative below this 3-bar play. But as you can see, riding the 9, it did continuate down, but let's cover it. So from previous day low at the break, so from here to here, we got rising volume, confirmed entry, and a candle close. We're in. Okay, stop loss is at what? 108.75 for a tight conservative stop loss, or this 9 EMA, a very loose stop loss at this point. It drops, we end up getting rising volume as it breaks another level. Good work. It ends up holding the 9, not going up to that level or a stop loss, with a lowering volume buyer candle. We get another lowering volume candle, but it breaks new ground. We're under a new low now, so that's a good sign. We don't have accumulation volume, so you can do one of two things. You can TP here, which we ended up doing on the next candle, or you can try and hold with the 9 with the loose stop loss. So if you're a scalper, which we were kind of intending to do here like we did, then you're going to want to take profit as quick as you can as you're seeing momentum give out. If you're a day trader and you wanted to hold these trades longer to farther targets, focus on riding that 9. But the big thing to do is focusing on entry with the right confirmation, setting the right stop losses, and sticking to your plan, not letting emotions kick you out. And then honestly, following this with one contract through the first entry to the first target is what you need to be doing for months on end. So hopefully you guys enjoy this video, enjoy this breakdown. Please check out the links below in the description of this video. But I'll see you guys in the next one, and thank you.